Greetings, comrades. So as stated in the title, I pulled this question from the 2022 exam. What we have here is a disposal of a van, and all we've got to do is complete a disposal ledger for 5 marks. Interesting to look at the stats of this question back in 2022. Average mark of 2.5 out of 5. So the state this year struggled with this question. There's a couple of traps. So I'm going to take a bit of poetic license with this question. We're going to do a bit of general ledger work, also record entries in the GJ just to reinforce key concepts here that relate to recording the disposal of an NCA. I think this will be easier if we record our balances for our van. So we had a balance of 45k for our van. That was our verifiable purchase price. Let's record that on the debit side of our asset account at the 1st of June. Balance 45k. And then we had $37,000 worth of AC dep. So that needs to be on the credit side of our AC dep ledger. And there it is. Now, what is tricky with this question is the dates. So if we look at this entry right here, so we've got the balance sheet at the end of May, and these are our figures, our balances. And then if we read down, it says on July the 1st, this is when we sold the van for 5k plus GST. So therefore, we've got a month here where we need to allocate depreciation for, because this AC dep figure here is at the end of May. We're selling this at July, and so therefore we need to work with this upper entry here. Depreciation is at 30% using the RB method. So let's see what this looks like in the GJ and the general journal. I'm going in reverse order. So depreciation for 1 month, that's going to be trigger a debit to the expense account, 1st of July. We're going to cross-reference that with accumulated depreciation on the van. And let's use the magic of Excel to work that out. Importantly, this is the RB method, and our reduced balance is 8,000. 45 cost minus the AC dep gives us a $8,000. Given we're using the RB method, this is the figure we're going to use for our calculation. So we'll type in our formula, equals 8,000 is our reduced balance. We're going to multiply that by the RB rate, which is 30%, so that's 0.3. And then we're going to divide that by 12, because we're only going to allocate a month here between the start of, or the end of May and the start of July. That's 1 month. So we're going to divide that by 12, and we get 200. So now we need to top up our accumulated depreciation. So we're going to cross-reference that with depreciation on the van, 200. And then we can total that up, 37,200. Let's see what that looks like in the general journal on the 1st of July. So we did a debit to depreciation on the van for 200. And we credited the accumulated depreciation on the van, 200. I'm not going to worry with narrations here. Now we're ready to record the disposal. So what we do is we create a temporary account. It's a temporary account because it doesn't appear in the cash flow, in the income statement, or the balance sheet. We use it much like the profit and loss summary account to help us do a couple of things. It helps us close off the asset that we've disposed of, but more importantly, it helps us work out whether we've made a profit or loss on the disposal, and that profit or loss will be reported in the income statement. So 4 steps we need to do. First step, we need to record that this van is gone. So therefore in our van ledger, we're going to zero this off, and we're going to cross-reference this to our disposal account. So 1st of July, disposal of van for 45k. And so therefore that leaves us with a zero balance in our van, which is what we want because we've just disposed of it. So therefore that's a debit entry in our temporary account. So in our GJ, let's just mirror that. We did a debit entry in our temporary account, disposal of van for the full cost, 45k. And we did a credit entry to our asset account, 45k. Okay, step 2, the ACDEP. The ACDEP that's attached to that van, that also needs to be zeroed off. So ACDEP will always have a credit balance. So we're going to need to do a debit entry here for our total on the 1st of July. So that will be cross-reference to the temporary account, disposal of van, for 37,200. Don't forget about that 200 that we just calculated. And so therefore that will be a credit entry in our temporary account. Accumulated depreciation and 37.2. So in the GJ, let's just mirror that. So we did a debit entry to our ACDEP account for 37.2, closing it off, and then a credit entry to our temporary account. 4 steps, that's step 2. Next step is we need to record the proceeds. So we sold the van for 5k plus GST. So this time I'm going to start with the general journal entry. So our cash at bank's actually gone up by 5.5k, given the GST is included in that deposit or receipt. Now we keep the GST separate from the disposals, so that credit on the GST will basically be combined with our other GST receipts. So just be wary of our GST clearing account. We need to keep that separate from the asset, 500. So the rest goes to our disposal account, and this will help us work out whether we've made a profit or loss. So let's post this to our disposal account, which was required in the question. So therefore that's a credit entry, cash at bank, again ignore the GST, 5k. So step 1, we've recorded the write-off of the van. Step 2, we've recorded the write-off of the ACDEP. And step 3, we've recorded the proceeds. Step 4 is we need to calculate the profit or loss on disposal. And this is a temporary account, so we need matching totals on both sides, just like we do with the P&L summary. So using the magic of Excel, let's just work out our totals here. Obviously, we've got a 45k total here. Let's see what we've got on the credit side. So equals the sum of these numbers. All right, what we need to do now is we need to top up our credit side so that we've got 45k matching totals on each side. So therefore, our amount here will equal 45k minus these 2 credit entries. So what happens to this 2,800? Is it a profit or a loss on the actual disposal? Well, let's think about this. Our carrying value was 8,000. It's now 7,800 because of that extra 200 ACDEP. And we've received $5,000 for it. So this 2,800 is a loss. We've received more than what we expected based on our carrying value. So this means that we've under depreciated the asset because we've either overestimated our useful life. Okay, residual value is not relevant here because this is the RB method. So our entry into our temporary account will be a loss on disposal of the van. That will be reported as an expense in our income statement. And in our GJ, that's going to be a debit entry to our expense, loss on disposal of the van by 2,800, and a credit to our temporary account, which has now been closed off, given we've got matching totals on both sides. So importantly, make sure we do have those matching totals on both sides.